Hi and welcome to Swissquote's Daily Market Talk. It's Monday, July 14th. Trade tensions intensify as Donald Trump announced 30% tariffs on Mexico and the European Union during this weekend. The US dollar is down this morning. The euro is slightly up despite the bad trade news, while Bitcoin and silver rally further. The Japanese yields, on the other hand, are pushing higher ahead of next weekend's upper house elections in Japan, and the earnings season officially kicks off in the US this week with big US banks' earnings on the menu. So we will talk about all that and more. But before we do, please keep in mind that opinions are my own and this is not financial advice. So Donald Trump continued his tariff reveals during the weekend and revealed that the European Union and Mexico would be hit with 30% tariffs starting from August 1st. That's way more than what the European Union expected that they would get, to be honest with you. They were hoping to see a number closer to what the UK got. Remember, a 10% maybe that would be acceptable, with exceptions for key sectors like metals and pharmaceuticals. But all they got was a big and fat 30%. Now, Trump left the door open for further negotiations until the 1st of August, and maybe there could be some fine-tuning on the wire. But with the level of tariff rates that we have been discovering since last week, you actually wonder whether it's worth spending your time or it's worth losing your time trying to negotiate with a government that's gone completely out of its mind, or it is just better to go and seal other deals with other nations. And that is what the European policymakers are now discussing among each other, finding new friends. So the US and European futures are in the negative this Monday morning at the time I'm talking here. The DAX futures are the most hit at the time of talking. They are down by 0.60% right now, while the British FTSE futures are somehow flat, as it becomes clearer by the day that the United Kingdom will be among the rare privileged partners to have access to the US markets with only 10% universal tariff. But it doesn't seem to help much, to be honest, because last Friday's production and growth numbers from the United Kingdom looked bad. The GDP declined for the second month in a row, and both industrial and manufacturing production in the United Kingdom declined faster than penciled in by analysts on the back of rising energy prices, property taxes, on top of the trade uncertainties, obviously, and sending cable below the 1.35 psychological level, which also matches the 50-day moving average level. Now, trend and momentum indicators for sterling remain comfortably bearish, mind you, on weakening growth expectations for the United Kingdom's economy amid the government's narrowing headroom, fiscal headroom, remember, for spending, hence on prospects of higher taxes and on prospects of lower spending. Both are negative for growth outlook. As such, the euro pound is also marching higher, targeting 88 to 89 cents range within the next 3 months. So sterling is under pressure, even though cable remains a little bit more sustained by the US dollar's weakness. Now, zooming out, the US dollar starts the week on a weaker note as the renewed trade tensions between the US and partners keep the dollar appetite limited, and despite that, the dollar yen, however, is pushing higher this morning as political concerns in Japan apparently weigh heavier than the weakening dollar appetite across the globe. The Japanese yields are again under a decent upside pressure this morning in Japan, mind you, ahead of next Sunday's upper house elections in Japan, because investors around the world fear that in case the LDP maintains its majority in the upper house, they will follow with their ample fiscal spending plans to support the Japanese economy, obviously, with discussions ongoing over a possible consumption tax cut. Now remember, the Japanese pension funds and the Japanese insurers are among the biggest biggest buyers and investors of US Treasuries and also US stocks, and rising yields in Japan could encourage some of them to repatriate their funds back to Japan and the Japanese assets, and that could send some shockwaves toward the global financial markets, as it already happened a few years ago during summer, remember. So we continue to keep a close eye on the Japanese politics and yields, but beyond Japan, we actually see that China wakes up to this new week with encouraging news on the wire. The news that their exports grew 5.8% in the month of May versus 5% penciled in by analysts on partial tariff relief with the United States. So the CSI 300 index is looking better this morning, while the Hang Seng index is preparing to test the 2025 highs within the coming days. So if China could manage to improve its relations with the rest of the world on the US tensions, that would be good news for the Chinese. But it's not that simple, because not that the tensions between the European Union and China are rising again since last week, as the Europeans also accuse China and the Chinese of killing their industries because they simply cannot match the prices that the Chinese propose. And yes, that is completely normal, because basic salary on a production line in China ranges from 500 to 800 US dollars, while the same worker will be asking for 2,500 to 3,000 euros in Germany, between 1,000 and 1,500 euros in southern European countries like Italy or Greece, for example, and the salary could actually go lower to around 600 euros in a country like Bulgaria, for example. But obviously you then heard some capacity constraints there. So there is a very solid reason why China has been the factory of the world over the past 2 to 3 decades. And while changing that dynamic will, by bringing these jobs back to Europe and back toward the United States, well, will hammer the Western purchasing power by sending prices higher and, well, supporting inflation. It simply means that people will be working more and earning less. I don't think that people in Europe will love that idea. But anyway, the euro dollar is slightly better bit this Monday morning on the back of a broadly softer US dollar. The revived tariff threats with the US weigh more on the dollar appetite than they do on the euro appetite, apparently, which is interesting because 30% tariffs on the European exports toward the United States will necessarily dampen demand for the European products and hence for the euro, and that should normally weigh on the euro. So what we observe today is that the story is not the euro's strength, but the US dollar weakness, as it has been the case since the start of this year. Now, interestingly, in that context, gold is no longer reacting as strongly as it used to the trade turmoil, but silver is, well, doing some more catch up on weaker US dollar at $39 per ounce level this morning, while Bitcoin extends this rally to fresh record highs as the price of a coin just drilled above the $120,000 mark this morning. Guys, Bitcoin is now back to the overbought territory, obviously after the recent push higher, meaning that a downside correction toward the $105,000-$110,000 range could clear the way for a further run. But it is a sure thing that the US crypto-friendly policy shift and EM and institutional adoption remain the major forces behind this rally, and they remain intact. Anyway, this week investors' attention will be partially shifting from trade tensions to earnings, with big US banks and Netflix due to announce their second quarter earnings throughout this week, while the US and British inflation updates will give some more insight to investors on the potential impact of tariffs and also the fiscal policies on Brits, for example. So it will be a busy week in terms of economic data and earnings, so we will talk about all that throughout this week, but this is all for today. I'm İpek Özkardeşkaya, and thank you for joining me, and thank you for for all your beautiful and supportive comments. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions, and your questions below. Follow us on Instagram, on X, on LinkedIn, but also on WhatsApp, Threads, Telegram, and Blue Sky for regular market updates. Subscribe to our YouTube channel for daily market comments, and please don't forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again tomorrow, and until then, good day trading.